Hello, and welcome to the latest instalment of MFS's Conversations with Connor, where we break down the key property news stories and what they may mean for you. Before we dive into today's episode, I want to take a moment to share a quick disclaimer. MFS are a bridging loan and buy-to-let mortgage provider and are not financial advisors. The opinions and views expressed in this episode are personal to the host and guests and may not reflect the views of MFS. For more information on MFS, you can find us at www.mfsuk.com. Now, let's get started. Hello, and welcome to our new series, Conversations with Connor. In this series, we'll be rounding up and exploring some of the latest property-related news stories to give you a bit of an overview of where we stand in the market. What motivated us to start this series was simply seeing how relentless the news had become. We know how busy our brokers and borrowers are. We work with them every day, so we know how hard it is to keep on top of, a never-ending news cycle. That is, if they felt like keeping up with it at all. There's no getting away from it. The headlines always seem to be negative, especially where property is concerned. One quick glance, and you may feel that there's simply no hope for recovery if you quickly check the headlines. But it's important to remember that what we're actually getting is a distorted picture. The big media companies and newspapers know, as much as they might be unwilling to acknowledge it, that people are more likely to click on a negative story over a positive one. Meaning, they're much more likely to have a preference for promoting, a disastrous story over a happy one. I'm sure, you've probably noticed this yourself, or you at least had a hunch that this is what was going on. In this series, I hope to provide a counterbalance to that. I'll be examining some of the positive bits of news out there that have come out in recent weeks that may have slipped under your radar. I'll be looking at what they could mean for your client's portfolio or how you simply progress going forward. But on that though, I'd like to remind everyone, MFS is not a financial advisor. We are a specialist lender and we cannot guide anyone on how best to invest or where to place their capital or what may be on the horizon. Hopefully though, what we go over here will provide a bit of clarity on what options may be out there. To start with, let's focus on some of the market-specific updates that caught our eye in May. Thankfully, despite all the challenges facing it, the rental market is showing real signs of recovery in certain areas. Q1 was a particularly good quarter for renters themselves, with Benham & Reeves reporting that rental stock availability across England rose by 12% year on year, which equates to about 155,000 properties. In fact, the majority of England's counties saw a rise in volumes of homes reaching market for potential tenants. Now, you might expect a rise in supply to be met with maybe lowering prices and demand, but that's not necessarily the case in the current market. Various recent surveys have shown that the vast majority of landlords saw rising demand for their rental properties in recent months. At the same time, rents themselves are up 6% year on year, and the average rental yield hit a 6-year high of 6.1% in the first quarter of 2024, according to Paragon Bank. This is a great result for landlords who have been struggling in the last few months, and it actually corresponds with what we saw in our own independent research from the first quarter. The investors we surveyed said they thought that rental properties held the most potential for the year ahead, along with student lets and holiday lets and other type of assets in the rental market. Some investors might fear that they've actually missed the boat here, but the window of opportunity could stay open for some time yet. Many landlords are still selling up in the current market in the face of uncertainty and rising costs, which means more investment stock could come to the market over the coming months, so let's keep an eye out for that. And on this, actually, there's a few key locations where investors could look for their next opportunity. So, for example, even now, locations close to a Crossrail station are outperforming the wider market. House prices in postcodes near a Crossrail station rose by an average of 3.3% since the line opened. Comparatively, property values in the wider areas around the Crossrail route dropped by 3.5% on average since May 2022. Now, it's worth paying attention to these commuter belt hotspots. The city exodus that we saw during the pandemic, it actually appears to be going into reverse now. Rightmove found that London-based house hunters are shunning the countryside for city life, going against what we saw in the post-pandemic world. This ties in with many opinion pieces and features that I've seen recently on city folk regretting their move and struggling to adapt to rural life. Also related to this is we're slowly seeing the tide turning on flexible working, at least in certain sectors. Bosses across various industries are starting to demand that their staff return to the office and suddenly, being out in the sticks doesn't seem very attractive. Keep in mind as well that this may also boost demand for commercial property. Once again, we could see a bounce back there. And this is just as well considering UK councils now have the power to actually auction off shops if they've been left vacant for over a year. As we all know, there's quite a lot of boarded up shops and retail centres out there that struggled to bounce back following the pandemic. And so if you own a commercial property that you've been sitting on for a while, I'd be careful just with what's coming. The private auction world also saw sales rise in the south by a fifth in Q1 compared to last year. Again, showing that confidence is broadly on the rise as plenty of investors turned into auction houses to try and perhaps pick up a property at a decent price. While living in the middle of nowhere no longer makes sense for a lot of the workers out there, our posh villages are actually commanding house price premiums of over 100% according to analysis from Yopa. And a specific hotspot is the Cotswolds, which is also offering the most profitable holiday let opportunities for investors. Knight Frank also reported that student housing investment was robust in Q1, with about 750 million worth of transactions completed. And, speaking of the younger generations, warnings have been issued in recent weeks that the millennial and Gen Z cohorts could be hit by unexpected inheritance tax bills, especially as baby boomers start handing down their property wealth. Nobody wants to be hit with undue taxes or face unexpected costs out of nowhere. And, just as a reminder, bridging can help with those IHT bills and other complications in that area. And what underscored all these positive bits of news is the economic data that came out in May. Again, it's taken many by surprise, especially in the media. Inflation slowed to 2.3% in May, which is so close to our 2% target, which feels like a lifetime since we've actually hit. At the same time, GDP in the UK grew by 0.6%, which doesn't sound like much, but it is the fastest growth we've seen in nearly 3 years. So we're pushing in the right direction. The base rate stayed at 5.2.5% in May, but Andrew Bailey did hint that he's very optimistic that we're heading in the right direction, and hopefully what that means is the base rate will start coming down over the coming months. And as the economy recovered in May, we also saw recovery in house prices. So Nationwide reported that house prices fell slightly by 0.4% month on month in April, but Halifax reported that house prices rose by 0.1%, whereas Rightmove recorded a rise of 0.8%. And the big one, the ONS house price index, which is based on official land registry data, showed that house prices edged up by 0.7% in March. And the average UK house price now, according to the ONS, is 283,000, which is $5,000 higher than 12 months ago. And while these increases may seem relatively small or insignificant, we should remember that they're simply paving the way for hopefully much bigger growth down the road. For example, Savills, in light of all these results, actually upgraded its 5-year price growth forecast. It did expect house prices to rise by 17.9% roughly. It now expects it to actually be closer to 22%. So by 2028, the average UK house price could sit around just shy of 350,000 according to Savills, which is an increase of about 60,000 from today. But of course, there was one big piece of news in May that completely overshadows all of this. We've now got a general election to look forward to on July the 4th, and this will obviously have wide-reaching impacts for the economy, the property market, the investment markets, and taxes, pensions, everything. I'm not going to go into details on the election here, or what it may mean for the market going forward, because we actually have another episode of the Let's Talk Property podcast. My amazing colleagues Leah and Mike actually covered this in detail. You can find this episode on our website now, and I highly encourage you to catch up if you haven't already. So that's it. That's the first episode of Conversations with Connor done. I'd love to know what you think. I really hope it was enjoyable enough, informative enough, and hopefully gave you a bit of perspective on what's going on in the news. I can't cover everything, obviously, but I hope I got the essentials down. But I'd love to hear what you think. This is obviously a work in progress, so please feel free to let me know, let us know Was this episode too long, too short? Did I cover some of the key areas you wanted to hear? Is there anything else in the economy or property market that you want covered? I'm learning as I'm going here, so I'll be looking to improve where I can. So feel free to send any feedback to us at the marketing team, and we'll incorporate that into ongoing episodes. Perhaps maybe if you have any questions or comments on the news, on what we're doing, on anything, I can maybe cover that in future episodes or answer some of your questions. If you would like to share feedback on this series or anything to do with the Let's Talk Property podcast, feel free to message us at marketing@mfsuk.com. And I'll see you in a few weeks when we cover the key news stories that happened in June. Thank you. If you enjoyed this episode, don't forget to subscribe, like, and share. You can access our previous episodes in all the usual places, as well as on our website at www.mfsuk.com/podcast. See you next time.